Simon Dingemann's GlaxoSmithKline has a lot going on, from the human genome bid to Obamacare. So first of all, what's the overall direction of the company?
Well, the last 3 years have been really about repositioning the company, investing in our geographic exposure to build up the emerging market presence, investing in our vaccines and consumer business to really broaden out the footprint of the company, and at the same time back a very different approach to R&D that's now beginning to read out in a pretty broad-based pipeline, and the next couple of years are going to really be an interesting time in terms of the data flow for that.
Well, things are pretty interesting right now in Europe. How's your European business?
Europe is definitely very challenging. We said at the end of last year that we saw a number of austerity measures beginning to play into performance for 2012. We've certainly seen that playing through. And in any event, it's probably a little worse than we expected during the course of the year, but we'll have to see how the balance plays out.
You mentioned the emerging markets. Are you making up for some of those shortfalls in Europe with growing business in the emerging markets?
Well, the emerging markets are not immune to the overall economic environment that we find ourselves in, and so we've certainly seen in the back end of last year and through the early part of this year some pressure across the markets, with places like Brazil and India clearly slowing down. That said, we remain very bullish on the prospects for emerging markets. We're continuing to invest behind those, and certainly in the long term, we expect that there will be a very major growth driver for the company.
Now, I mentioned Obamacare. How will this affect GSK?
Well, we've been restructuring our US business over the last 2 or 3 years, to position ourselves for the shape of the market, and the market has been consolidating quickly. Obamacare is just one piece of that, but we're positioning ourselves for a much more institutional market and making sure that we can really cover our patients and our customers in the US in the most effective way, and also position ourselves for the new pipeline that we hope to have over the next several years. So the US remains a very important market for us.
What exactly is in that pipeline? Because that's the all-important factor with drug companies.
Well, first of all, you have to recognize that we've taken a very different approach over the last several years to our pipeline, which is to broaden out and diversify the discovery approach to target a range of products rather than particularly pursue the next new blockbuster. And in that sense, what's distinctive about our pipeline is the range of options that we have within it, whether it's building out our respiratory portfolio, new oncology products, HIV, vaccines. Across the board, we're seeing a much broader approach to a series of smaller scale products that add up to continued momentum in the pipeline. So very different from the approach of the industry and for GSK of the past.
Well, you're also pursuing human genome. What's the state of that bid? There's also talk about a bid for Amylin. That might just be a rumor. Where are you with regard to these potential bids?
Well, on HGS, we think this is a very logical moment to simplify the arrangements between us and HGS, and we share Benlysta, a launched product. And the timing is really driven by the fact that that product's now on the market, and all the facts are out there, the trajectory of the product's clear, and it's time to rationalize the arrangements between the two companies, and we see a lot of value leaking if we don't do that. That's really why we've made the move now. We think an 81% premium to the undisturbed price is a very compelling offer. We've made our offer to the shareholders, and they will get the choice to decide whether to take it as that offer comes to a conclusion at the end of June. As to Amylin, I'm not going to comment on any other specific targets, but I think we've got more than enough on our plate with HGS.
Well, finally, you also offer a 4.8% dividend. It's pretty nice compared to what we're seeing, especially in the Treasury market. Any plans to reduce that, hike it, or will you just keep it the same?
Well, we've been steadily growing our dividend over the last several years. It's our first and foremost commitment in terms of distributions to shareholders, and we are committed to a policy of continuing that growth in the future. The rate at which we grow will be for the board to decide as we go forward, but it is very much our primary concern in thinking about returns to shareholders, alongside the buyback program that we started last year. And overall, we're looking to return our free cash flow between dividends and buybacks to shareholders as a whole.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to